Hi, I'm James Robinson, and this is my stock pick of the week. This week's stock pick is Blackrock, symbol BLK. So if you're following at home and you're investing in some of the things I suggest you invest in, or you want to be investing in the things I suggest that you invest in, I'd like to suggest you follow me on Twitter. I don't always have time to make a video immediately upon deciding to buy a stock, and certainly I don't make videos when I decide to sell a stock. But I do post on Twitter within a few moments of when I make that trade, what trade I've made and at what price, so that you'll be up to speed, or as up to speed as you can be on when I'm doing things. I'd hate for you to not see it, for me to sell a stock because I don't think it's good anymore, and for you to miss a video where I describe that I might have sold it and you continue to hold it and it goes down in value, which is why I put that information on Twitter. So my handle is @RobinsonStocks. You can get real-time information on trades, or at least virtually real-time. You get updates on when a new video is posted, and also you get videos and thoughts and articles that I find on the market that I think are interesting, or stocks in the portfolio, information on stocks in the portfolio that's interesting. Like everybody on YouTube, I'd love it if you'd subscribe. Obviously, I'm trying to grow my subscription base. If you like and comment, that helps me get new viewers, so I'd appreciate if you do that as well. And let's get on with the video. I always start a series on a company with an overview of the company, where I look at just some of the general fundamental things that have interested me in the company, that I like about the company. And then I'll do 4 more videos which are deep dives on the company. I look at the operations, which is how good a job the company does in delivering goods and service to the customers. I look at the company's balance sheet, which is how much cash and debt they have and what the risk is in that particular area. I look at the company's dividends, and that's both the amount of dividends they're paying, what's happening with the dividends, and how secure I believe the dividends to be. And then finally, I look at wealth creation, which is how good a job the management does at doing what should be its primary focus, and that's creating wealth for us, the shareholders. So BlackRock is a publicly owned investment manager, and they're very large, over $70 billion, so one of the largest. The firm primarily provides services to institutional, intermediary, and individual investors. They do they do corporate, public, union, and industrial pension plans. They work for insurance companies, for third-party mutual funds. They do for endowments. Long story short, if you've got a large amount of money and you want to put it to work in the marketplace, one of the places you're likely to go is BlackRock, and you like to give them a portion of your money to invest. And they manage everything, right? They do client-focused equity, fixed income, and balanced portfolios. They do real estate funds. They do hedge funds. They invest in public equities, fixed incomes, real estate, currency, commodity, alternative markets. They do it all over the world. They like growth and value stocks for small cap, mid cap, large cap, and multi-cap companies. And they also look at dividend-paying equity securities. So long story short, these guys kind of run it all. They are very quantitative, which means they're numbers-based, but everybody claims to do that. But these guys have a very good history of success. The company was founded in 1988. It's based in New York, but they have offices all over the world, and they have 16,200 employees. As of April 10th, 2020, the company's market cap was $73.44 billion. The company's revenues were $14.5 billion. It had profits of $4.48 billion, so really, really good margins. Due to the coronavirus, this stock's PE ratio is down to 16.8. This is another company that I've followed for a very, very long time. It's one of the 5 highest rated companies that I've looked at and I've looked at over 1,000, or just under 1,000, but it's one of the 5 highest, and we're really benefiting as a result of the coronavirus and the crash in the market by finding really, really great companies we can buy. This company has 16 PE ratio, I think, is a steal, but it's more an example of buying a great company at a fair price versus buying a fair company at a great price. I know there's stocks out there trading at 3 and 4 times earnings that I might consider buying, but this is a company that I think is hyper safe. They're very, very solid. They're going to stay in business for a long, long time. Also, the company's yield is 3.08%. That's a very good yield for a company of this quality. Remember that historically speaking, I know that's not the case anymore, but historically speaking, the S&P 500 P ratio is about 2.2%. So this company is about 50% higher than that. Now, I know that the market S&P dividend yield has increased as the prices have collapsed, but I don't think that's very sustainable, because I think a lot of those companies are going to be cutting their dividends. I'm not sure if these guys will, but I think they'll bounce back more than most companies. Also, this company only has about $6 billion in debt, and that's against $4.4 billion in annual profits. So it has about a year and a half's worth of income in debt, so not very much debt, not enough that we'd really worry about. So very, very solid, very, very large company with a very good dividend. Every time I do one of these overview videos, I always post this slide, which looks at how I've rated this company overall in all of the categories that I look at. Generally speaking, I look at, in fact, not generally speaking, I look at 29 categories when I'm analyzing a stock. 9 of those categories are operating categories, and operating categories really measure how efficient a job the company does in delivering goods and services to their customers. The next thing we look at is financial, which is how much debt the company has, what the company's assets are, and what the risks are associated with this company's debt level. Finally, I look at management, and management's key job for this analysis is how good a job do they do of converting profits to income for the shareholders, and how that's handled, how that's worked out over time. So generally speaking, these 29 categories, I think we have 4 categories where the company is average, and everything else they're way above average. They have 2 categories where they're above average, and then the rest of the categories, 23 categories, I guess, they're significantly above average. This is one of the only companies that I've ever looked at that has all 3, operating, management, and financial, with a rating of over 3.5. It is one of the 5 best companies that I looked at. I've followed this company for a long, long time, but been unable to pull the trigger because the price has been so high. Now the price is really low, and so I'm buying it. This is another example of a company that I think I could own for a very, very long period of time. If this company goes up 15%, for example, I'm not going to sell it. There's a lot of companies that I do that. I buy it and it goes up 15 or 20%. I take my money and invest it someplace else. The money that I'm putting in this company, I'm very likely to hold for the very, very long time. So by way of summary, I went back and looked it up. This is the 3rd highest rated company of the 928 companies that I've reviewed. Blackrock is also the largest asset manager in the world in terms of assets under management, with $6.8 trillion. So I believe due to their size, they'll recover very quickly from the coronavirus. They'll be more importantly, they'll be in a position to benefit from the downturn of the market. These guys are in so many different areas. They'll be investing their clients' monies hopefully intelligently and taking advantage of the same things that you and I are hopefully taking advantage of, and they should do very, very well. This is a company I've been watching for years, looking to buy, and now I finally can buy it, and as a result, I think it's going to be a very long-term hold for me. So that's it for Blackrock. That's a summary. Stay tuned in the next few days for more in-depth information on the company, but I'd encourage you to go out and buy it today. It's down a little bit today, and I think we'll all do very, very well with this stock.